So which of these is considered taxable interest income?
C.
C. Mm-hmm. Interest from a savings account. The other ones are not. Interest from municipal bonds are normally tax exempt income. Dividends on the life insurance policy are actually not taxable at all. Usually they're rolled back into the life insurance premiums, or if they're paid to in cash, they're actually reduce your basis or something like that. Let's see. And federal income tax refunds are not interest income, although you could get interest on your tax refund. And that would be taxable. Next one, true or false, qualified dividends are taxed at the same rate as ordinary income. False. Yeah, qualified dividends, they're qualified to be taxed at a lower rate. So the qualified dividends are taxed at the same tax rate as long-term capital gains. Okay. When reporting capital gains from the sale of stocks, which IRS form is used to calculate the capital gain or loss?
8049.
80, close to 8949. Yeah.
I'm looking at it. Let's say.
What is the tax treatment of a non-dividend distribution?
Reduce the cost basis.
Yes. Yeah, it's considered a return of your original capital, and therefore is reduces your cost basis. Which statement about backup withholding on interest and dividends is true? A, backup withholding applies at a rate of 10%. B, it's only applied if the taxpayer requests it. C, it's mandatory for all taxpayers. Or D, it applies if the payer does not have a correct Social Security number on file for the taxpayer. D. Yeah.
Wait, I thought that was 28% if they didn't have their Social Security.
It's it used to be 28, now it's 24. So that's why A is incorrect, because it's not 10%.
So it would be.
Yeah, D is the correct,
But
it's the only true statement out of those books. 24%.
Thank you.
Which form can be used to request voluntary withholding on certain payments? W4, W9, 1099, or W4V? The W4V. W4V is for voluntary withholding on payments such as unemployment and Social Security. Which of the following is considered a long-term capital gain? Gain from the sale of stock held for 6 months. Gain from the sale of stock held for more than 1 year. Yep, that's the one. Yep, more than 1 year is the definition of a long-term gain. C is technically correct, but B is the best answer because that's the actual.
C is technically correct.
Yeah.
C.
No, correct. C is technically correct, but B is the best answer. What is the tax treatment of qualified dividends?
Tax to capital gains tax.
That's correct. And where should ordinary dividends be reported on Form 1040? Yes.
The book says line 3A and 3B, but it only gives you line 3A on 1 and line 3B on C. So what is there?
It's 3B. All your ordinary dividends go on 3B. Qualified dividends go on line 3A. Where should capital gain or loss be reported on Form 1040?
B, line 7.
Line 7, that's correct.